All right. Good morning, traders. Oh man, I have a mentor that works with me um, that I I've had for a while, and we were talking yesterday about some of the things that are challenging to trading, some of the things that I go through, and I just wanted to kind of pull from some of those ideas. Um, is first of all having a trade plan. Well, let's say this: having a setup, right? What is your setup? How do you get in? How do you get out? How do you manage? And how do you, um, I don't know how this all works together. Setup. So, but this is kind of the right, the thing, because you need a couple parts to it, right? You need to have a setup, and you have to be able to manage the trade. Now, I struggle with this because I see so many trades, and I will uh, get into something that I just shouldn't be getting into, and whatever. Uh, and so I need clarity on that. And as I go through my day, I I try to get you know I try to get clarity in a way that that helps me see the market. So if I'm up here and I'm really upset, and I'm down here and I'm really excited, right in the middle is where just being present is. And so being present in the moment is where I need to be. And I can't be excited about the last trade. I can't be bummed about the last trade. I can't have any of that stuff going on because I'm going to bring that to the next trade. And so what I'm trying to convey here is that by having the clarity, my trade setup is clear, right? One, impulse leg, right? I am looking for a impulse leg that has taken out another high or low, right? So it impulses through. I'm looking for a reaction leg. So that's the reaction to that impulse leg, right? So we have the reaction. And I'm looking for a shelf to be built and broken. Shelf popped, what I call it. Pooped, popped. Shelf popped. And I'm looking to enter on a retest of shelf. So this is my basic setup day in and day out that I go through, right? Any business has got a bread and butter, basic. This is what I do. The car mechanic does oil changes, service calls, and then he gets the other jobs on the side because people like the service and blah, 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 blah. So in this setup, we have our impulse leg, boom, our reaction to that leg, the shelf is popped, and then we enter on the reaction of the shelf. So this is the basic anatomy of a trade that I go through, and this is where I want to get in. right? And you see the shelf, kind of, they all come in different shapes and sizes. And something that I was reminded about, and this is important, is that don't make stuff up, right? If that's my shelf and I didn't get in here, right? This is where I want to put my order. Don't try and jump on that, because there's times I'm so eager, I'll be like, shoot, I missed it. And I jump in, you know, it comes down, it takes me, and I don't quite get it. Over here we have our impulse leg and we have our shelf, but it starts going on without us, and so you'll hit the buy order or something like that, and it just, you don't know what's going to happen, and all kinds of stuff can happen in there. So I would probably have less trades and more success if I could stick to this one plan. And that's what having a mentor helps remind me of. Now, to that point, with the management, on the management side, one, I'm looking for a 3-to-1 trade minimum, right? I don't, because a 3-to-1 trade means if you have a 30% win rate, you're going to at least be able to make a profit over a basket of trades. So out of a collection of trades at the end of the week, let's say you do 10 trades a day, that's 50 trades a week. And you're going to have, at a 30% win rate, your win rate will be lower, but your profit margin will be higher. So you're gonna lose most of those trades, 70% of those trades, but those 20 some odd trades that you win are gonna clean up for all those other trades. So that's why we want to have that. 2, stop break even. Now, this is something that I always have struggled with. I moved to break even a bit too quickly, right? I will get entered in, and I'll just, I'm in. I want that pain to go away. We have to accept the risk that we are taking. We have to accept the risk that we are taking. We're not going to avoid the risk. There's no way we can get around it. We can't massage it. We can't take it away. So we have to embrace it and know that our setup and our system will take us to where we need to go. And now I'm guilty of it. I mean, I struggle with it a lot, and it's not something that's unavoidable. It's like how people manage certain things in life. Some people manage things better than others. I'm totally guilty of moving my stop too quick and getting stopped out. Happened to me the other day. Again, it's why it's good to have a mentor, someone to talk through these things. So, when do you go to break even? What would set me up to have a break even trade? When do I need to go to break even? So I spoke with my mentor about it, and we have decided that when you're at, what the heck? Oh, wait, sorry. When you're at 2-to-1, is you've got to draw a line in the sand somewhere. So at 2-1, I go to break even. Okay. So as price is moving up into here, taking out these guys. Sorry, that just seems really close. But that makes sense. My numbers are off here. That's why. 1750. Oh, come on. Cooperate. There we go. So as my price is moving up, I'm reducing my risk at 2-1. Now, I have oftentimes have moved my stop behind the pivot that I entered on, right? So let's say that this was my trade. I got in here, I moved, and my stop was right here. I've moved in right behind that, and then you get popped out, and it's you've lost, you lose a little bit. It's basically a break-even trade, something like that. Because oftentimes price will come back to that line and then take off. Once it runs into the pressure cooker of the expansion or the impulse leg here, it runs into this guy, it'll come back down, and I can show you examples of that. And then take your money at 3-1. So to recap, you have your impulse leg. Your setup is your impulse leg. Where is that? There it is. Setup. My trade plan. This is basically what I do every day. I look for my setup, which is an impulse leg. I look for a reaction to that impulse leg. Use this one. Boom. Reaction. I look for a shelf that gets popped. You can see right here. This shelf gets cleaned out. That shelf gets cleaned out. And it takes off. It comes back down. And then it takes off again. It's just the natural progression of a swing. Enter on the retest. I watch price go up. Once it hits 2-1, right there, I move to break even. And then after that, I take my money at 3-1. Now, you may want 4-1. You may want 5-1. You have to figure that out. You may just want 2-1 because it's easier for you to get out here. But remember that you're just trying to manage the pain of loss. And you're not going to be able to manage that pain and be in this business if you're going to think that you can just ignore that. You're a professional trader. You're a professional money manager. Losses are a part of the system, and embrace the loss and embrace the wins, and you'll get better at them. You'll get better at, this one here didn't wipe anything out, and I'm not going to make that up to be that. That's not, that's, pass. Let's just do a quick little exercise here. I don't know what day this is. This wasn't yesterday. And the other thing is that I have rules around when I trade, right? So I don't trade before 7, and I don't trade. I like to get out at 10, but half an hour before the close. Half an hour before the close, or before the so when the market opens, a lot of institutions are moving money around, and there's a lot of volatility, between here 6:30, they're resetting themselves, things are happening, and then afterwards people are cleaning up, doing different things, trying to get things wrapped up for the day. So it's not the good solid flow that we like as traders. So on this day, whatever day it is, we have price comes down, price goes up, price comes down, price goes up. So in this little situation here, price is coming down. Where's the shelf at? There's the pop. There's the pop. Where's this? Let's call that the shelf. I put my order in there. My stop goes behind the pivot, and I'm going to get stopped out. So I have one stop. Right? I wait. Oh, there's another pivot. I'm in here. I have one win. Price is taken up. Boom, boom, boom. I look for another opportunity. Price is going up, not going up, not going up. Boom, it's going down. And I'm right here at the end of the day. Forget it. So on this day, you have one stop, and let's say you're doing $1 a trade, or whatever your dollar amount is, $1,000, whatever your number is. You took a $32 stop and a $52 win. So that's a $20 day that you had. And the coolest thing, really, honestly, at the end of the day, you didn't buy here, sell here, buy here, sell here, buy here. You're not in and out, in and out. That's 2 trades. If you're doing more than 2, if you're scalping, I can understand if you're like just ripping, but I'm not here to scalp. I'm here to trade swings, and I'm here to buy impulse or reaction legs off the impulse leg. So I know there's kind of a bunch in that, but just remember that you need to have in your head clearly what is your setup, what gets you in, what gets you out, and how you're going to manage. If you take those 3 things, those 2 things, and put them together, you'll have a successful day, a successful week, and a successful month. All right, get after it.